This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. More knowledge, more wealth on AM 590, The Answer. Now here's your host, Gabriel Shahin.
Good afternoon. This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth, here on every weekend talking about all important topics of personal finance. Our goal is to give you the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short. Now, I'm a principal here at Falcon Wealth Planning, a registered investment advisory firm. We are a fee-only financial planning firm that do investment management as well. But folks, we talk about everything that involves a dollar sign. That talks about where you are today, how retirement looks like, talks about investments, insurance, estate planning, taxes. Folks, you name it, we can help with it. And we would love to help relate this show to your specific situation. So we are offering a free financial assessment. Typically, it's 1 to 2 meetings, 1 to 2 hours of our time, and we want to give to you complimentary. And we help people all across the country and would love to have you take advantage of it. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We look forward to helping you put together a customized plan with questions that you may have, that you've been desiring to have, because of look at everything that's going on right now. We're talking about the brink of having a recession, talking about high interest rates, low bond prices, low cryptocurrency, low stock market, war in Ukraine and Russia. Guys, there is no shortage of discussions of what's going on, and you may have questions on that. But what I'm really concerned about is not what's going on outside your home. It's what's going on inside your home. Not what's going on outside, but inside. And the reason that's important is you should be not worried as much of what's going on outside, but what's going on inside. Because right now you have to change your frame of mind reference. And that is you have to look at the positivity of what's going on right now. Your money wasn't 100% invested, or at least it shouldn't have been. It should be diversified portfolios, because when you look at the markets right now, down 20 to 35+%, depending if you're looking at the S&P 500 or you're looking at the NASDAQ. I know the Dow Jones is down about 15, 16, 17%, depending on the day. I know you're looking at small cap, mid caps, international, and so on. In essence, across the board, the markets are down. I think that's a fair general statement. But why are you so upset about it? Do you need the money today? Do you need 100% of the money today? Okay. Oh, but you're retired. You don't have enough time to make this up at 60, 70, or even 80 years old? I don't think that's true, because average recoveries take less than 11 months. Look at COVID. In less than 4 months, it was already up. Heck, the stock market was started to drop in February of 2020. By December of 2020, you were up 20%. Now, the interesting thing about COVID was the rebound and recovery and the amount of inflow. How many people invested when the market was down 30+%? Let me have some numbers for you. And I'll just talk big picture. If the market is down 50%, 50, your 100,000 is worth 50,000. Okay. So you're upset, right? You're angry. You're not happy, right? And even if it recovers 50%, you're not back at 100,000 because you made 50% on 50. So you're at 75,000. All right. Makes sense? Now, versus if you're down 10% and up 10%, you're at 99,000, right? Because the 100,000 dropped to 90. Then if you make 10% on 90, you're at 99. But right now we're looking at maybe a down 30% territory. To put that in a context is if your 100,000 is now 70,000, The recovery, you need to make 43% to get back to 100,000. If it drops 40%, you need to make 67% to get back to your original principal. The reason that's important, guys, is because this is a buying opportunity. If you have part of your money in cash, this could be a good time to buy, assuming you don't need the money for the next year or two. Why am I saying year or two? Because I don't know. It could take up to 3 years for the market to recover fully. During 2008, from the top of the market to the full recovery took about 3 years. That was a pretty bad time. Some compared it to the Great Depression. What's my point? You should be excited, especially if you have some money in bonds or other asset classes where you can rebalance, reallocate. More importantly, rebalancing, people get that. You could do that automatically in your 401k, but a reallocation is huge. That's where you could take money and reallocate it to what has suppressed the most. And please, we're not talking about individual stocks here, because those guys can go to zero. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth, here on every weekend, talking about all important topics of personal finance. And right now, I wanted to just share with you about the positivity of the market. I'm the only person in America excited right now that the markets are down. Great. Our clients are down millions of dollars across the board. I mean, we manage $500 million of assets, roughly. And so when our clients lose money, we lose money. So we're not happy about that, but you have to look at the opportunity. And what percentage of the clients that lost the money can afford it? All of them. I'm not saying they can afford to lose money, just burn money. No, but the way it's invested is known it could recover. Individual stock can go to zero. It could easily go to zero. Jeff Bezos says it about Amazon. Amazon will be out of business one day. His job, or what his job used to be, to keep it in business as long as possible. Every company will be out of business eventually. Look at GE. They used to be the powerhouse of the world. And now look at them. They're split up. They're small. Their market capitalization, they used to be a mutual fund in itself. It used to be worth hundreds of billions of dollars. And now it's a fraction of that. So when you invest in markets, it's not like that. See, individual stocks can make you a lot of money really quick. And also lose you money equally as quick, if not faster. Because when things are bad, they're really bad. When things are good, they're really good. But when you look at the global markets, it's in general. It's how the economy is doing as a whole. So you're not going to get your 100% returns like you did with Apple, Amazon, and Tesla, or 1,000% returns. You're going to get, historically speaking, 10% plus return on your money. That's important to note, because companies are designed to grow, and they're designed to go through recessionary periods. And certain companies do well in recessionary periods. And I know you're probably going to say there's not one company that's doing well right now. That's not true. How's Chevron doing? How's Exxon doing? How's all the oil and gas doing? You get my drift? Being properly diversified, you will always have something that is up. And most people don't understand that. They put their money in their FANG stocks, the Facebook, Amazon, Apple's, Netflix, and Google. They put their money in the meme stocks. I call them Reddit stocks, that GameStop and AMC Theater. How that makes sense, I don't know, but it sure sounds cool. Until it's not, until you lose a boatload of money. This is where you have to be smart. You can make a lot of money with individual stock. You can create wealth very well with that, but you keep it through diversification. And you have to do that at times like this, because we are looking at a fantastic buying opportunity right now. I mean, the markets are down 20 plus, 30 plus % from their high. This should be something you should be excited about. You should be salivating over. We don't get this option or often, and we were blessed enough to get it during COVID. And so many people that bought in at a down 30%, they didn't make 30% when it rebounded. They made almost 45% when they just got back to the principal amount where the market used to be. Look at it this way. If you put money in now, you're getting it without having to lose 30%. You're getting in. There are risks and reward to investing. The risks are losing money. Well, if you get money in now, there are no risks. And yet I see people being sold annuities. You should have bought an annuity when the market was at an all-time high, not when it's a low, because you're losing out on the rebound. It makes no sense to do that. And sadly, I see people do it all the time. I see people in individual stock that should have taken their profits last year. Heck, it may still make sense for you to take your profits now and reallocate it to something safer. I mean, you have to understand the markets of where they are. And this is why there's no substitute for professional. You have to look at where the markets are, how the government is looking at our current expansion period, where interest rates are. All of these play a part of the tech boom exploding that is very similar to what we had during the early 2000s during the dot-com bubble. We experienced something very similar to that with low rates and private equity firms and hedge funds putting money in to markets because it was so cheap to do it. It made no sense to go ahead and invest in the stock market when you can leverage out like crazy. I'm not recommending that you do that. What I'm recommending is that you understand, you get an opinion, you take advantage of something that may look dire or not pleasant, and you might be upset of multiple things. I've had people focus on the political climate at times like this. So let me understand. You were upset when Trump's in, while the markets were up, by the way, but let's not digress. And now you're upset that your guy's in. You can't have your cake and eat it too. You can't just, maybe you're just always upset. Maybe you're just that person that has the saying, for the sake of argument. Are you just wanting to argue? Are you just wanting to argue for the sake of arguing? That's what the sake of argument is. So please be positive. There is so much to be positive right now in America. There's so much to be positive right now where the markets are right now. Businesses are open. Businesses are making money. And the markets right now are going through a repricing. Take advantage. And if you need help with this, give us a call. We'd be happy to help. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Guys, we're going to go on a quick break. We'll be right back after a few words. Welcome back, folks. This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. And today we are discussing the current stock market. Yes, it's down 20, 30%, depending on the indice. Okay, but look at the positive. It's a 20 to 30% sale. We talked about it a few episodes ago where this is the only industry in the world where people get upset at a sale. But look at it like this, and I gave you some examples earlier of $100,000, or it doesn't matter, $1 million, $10 million, $100 million, or $1,000. If it loses 50%, 1,000 goes to $500. Wouldn't it be great to put in another 1,000 at that time? Another 10,000, 100,000, million if you're lucky enough to have that sitting in cash? Because once the market rebounds after a 50% loss, you make double. What does that mean? Well, if you're at a 50,000, it has to go back up to 100,000. You have to double the 50. So even though you lost 50%, you make 100% on the rebound. And it's like that no matter what. Right now we're at markets, depending on the indice, down roughly 30%. Well, you need to make a 45% rebound just to get back to where we are. And I'm just going to make an assumption right now. I bet you put $100,000 in 3 years from now, your 100,000 will be 150,000. Heck, I already said it'll be 45% increase if it comes back to where it was, let alone in 3 years from now. This is no guarantee, but it's the reality of just knowing where we currently are right now, where markets go up and down. And this assumes you invest in general markets. This doesn't assume that you buy individual stock that, oh, by the way, can go out of business. It's just interesting about the negativity that I see and the fact that consumer sentiment is so low right now, worse than it was during COVID when, oh, by the way, you were locked down in your house, when you couldn't go somewhere to eat. You had to wear a mask in public and you could only work if you had a mandatory job, a special trade service job that required you to go to work. I mean, how are you feeling worse now? I understand the high interest rates. I understand the home prices are a lot more. I understand inflation is through the roof. I understand the stock market, the bond market, the crypto market. I understand the war that's going on overseas. I understand all that. But my God, You have to understand, one, there's a crazy pandemic where things were shut down for months to where we are now, where people are still spending and buying money. Go to the car dealership. That's proof. Go look at home prices right now. There's still multiple offers all across the country. You have to be positive of where you are currently. You have to see the opportunity that's in front of you. Don't fall into the pessimistic society right now that social media just has you feel like everybody's crazy. I mean, sure, maybe everybody's crazy, but think of the positives to it. The positives are there are opportunity in markets. The positives is you have stability, dare I say, in America. We're not in a war right now. God willing, we're not ever in the future. We are handling our business through tariffs. They become economic wars. Still got what's lingering with China and eventually Taiwan. There are some talks there about America's intervention right now. And there are some tariffs that are currently being released to allow lower pricing and to reduce the inflation that's happening with China. 500, 150 or so are released. And so this may continue as well, especially trying to mend ties with our foreign partners, which the Democratic Party typically does a good job of historically. My point is, you could always find something to be complaining about and always something to be positive. I'm always an optimist. Always. There's always some positivity that happens. And not right now with the market so low, you should be positive. You should be optimistic to take advantage of sales. And right now, the market is on sale. I don't care the indice that you have right now. You can take advantage, and I can foresee you making money on this long term. As long as you're comfortable putting your money away for at least 3 years. And knowing, even if it goes down, I'm not saying we're at the bottom. What I'm saying is right now it's a great sale. And so as long as you're comfortable seeing it drop and knowing that it will over time recover, then don't worry. Be positive that you're buying in now. If you were happy 6 months ago, you should be more happy today. Because over 6 months ago, the market was over 20% where it is now. You shouldn't be upset today. Most people that are have no strategy. And I don't blame them for that. I don't expect you to. This isn't your industry. But to not listen and to stay procrastinating is no longer an excuse in today's day and age, especially if you're tuning in today. And this is why we're offering a free financial assessment, and we tell you to take advantage of it. There's no reason not to. If nothing else, get a second opinion. We can help nationwide. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We'll be happy to put a personalized assessment to help relate this show to your specific situation. By the way, folks, if you're just joining us, you're listening to Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth. You're on every weekend talking about all important topics of personal finance. And today we're talking about this beautiful market that's down, which isn't why it's beautiful, but because of the discounts that are there. And you should be taking advantage of this volatility that's happening by selling certain aspects in your portfolio and buying others that are down. Some might say, yeah, but what if it stays down or goes down more or goes to zero? Well, if it goes to zero, you're investing in the wrong thing. You shouldn't be investing in something that can truly go to zero. That's kind of crazy. The amount of risk that you're taking is equivalent to Vegas at that point. Think about it. To go to zero, that is a gamble. Versus if you're in an investment, even if you bought into a Denny's or a restaurant or whatever it is, at least there'd be some physical fixtures or furniture or some equipment that is there that you can liquidate. You get what I'm saying? Maybe it was just mismanaged. What people don't have the courage to say is they've mismanaged their situation. It's almost like admitting you have a problem. Do you consistently feel you're underperforming the markets, that you are not getting that 10% plus rate of return? I'm not guaranteeing you a 10%. I'm just saying, when you look at what the market's done over time, if you're not getting market-like return, you have to be questioning what you're doing or how you're investing and if it's appropriate for you. I mean, heck, the last 3 years have annualized returns of over 20%. Most people haven't got those returns. Why are people still trying to outperform this market? I'll never know. Professionals can't do it. They claim that they could do great at certain times of the market, whether it's expansion or recessionary periods. They say that they're good at capturing a tech segment of the market, or real estate segment of the market, or a finance segment, or a healthcare segment. They're not trying to say they can beat the market. They may show you periods of time they have. That's normal. That's what sectors do. You have to just realize where you're at, what you're trying to achieve. It's shocking. It's funny because we just invest our clients in indices, so they get index and market-like returns. It's crazy that not everybody's doing what we're doing. It's absolutely shocking. I mean, frankly, it's good for business that not everybody does what we do, but it's easy to explain to our clients when they make money because look at the market. It's easy when they say we lost money. It's like, of course we lost money. Look at the market. But it's taking that balance of how much risk and you're comfortable with reward. Everybody wants a reward, but how much of the risk are you comfortable with? There is a science behind it. And I recommend that you get help from a professional, whether it's us or somebody else. Just please make sure they're fee only, not fee-based, not commission-based, not somebody at your local banks, because those are product-driven salespeople. Nothing against it. I guess there's a place for it, but are you really only wanting advice from somebody who can sell you something and you have to buy? That's transactionary. I mean, really, a fee-only advisor is the one that I would get my advice from because you have to pay them directly the information they have in their brain, which is why it's so important that we are offering a free financial assessment because you won't have to pay for that. We get to show you what you're doing that's good, what's bad, and really what you should be doing. A lot of people have taken advantage of this. We've done thousands of assessments on an annual basis, and we'd love for you to join. We have me and my team of individuals, of certified financial planners. We can do this for you guys. Give us a call. We can help. We've seen multiple things from real estate owners to business owners to people looking to retire or to people that getting into investing. There is no wrong time to call. There is a wrong time to start, and that's when it's too late. And the funny thing is most people think that they should have started 3 to 5 years ago. Well, if that's the case, there is no wrong or early time to start because there's no cost for you to get information. Give us a call. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, or visit our website at falconwealthplanning.com. That's Falcon, WP.com for short. There is no excuses about what's happening in this market and to be fearful of what's going on. The market already dropped. It already dropped. For you to sell now would be guaranteeing and securing those losses. And most people, when they sell after a drop, they don't know when to get back in because they're kicking themselves for selling while it went up. The irony is, I need you to sell. You know why I need you to sell? Because then the market goes up right after you sell. You know how that works, right? The world revolves around you. So right when you sell, the stock market goes up. You know why it dropped? It's probably because you bought into this market. You get what I'm saying? It always seems like that's the case. Maybe because the issue is bigger than what it may actually seem. Get verification of that. There's no judging here. There's trying to get the right thing. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Folks, that was a fast show. I want to thank you for joining with us this weekend. You can always reach out to myself or any one of our colleagues at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Reach us. We'll have a personal, confidential conversation to give you the knowledge you need to increase your wealth. We want to thank you for listening. Enjoy your week. Have a great weekend, and God bless.